Hi and welcome to the Financial Spectrum blog. I'm Brenton Tong. Now today I'm going to be talking to you about how to keep your head as the market fluctuates. Now markets have shown a lot of volatility in recent times and people often ask me, when is this going to stop? Now if you're one of those people, I've got some really bad news for you, in that it's not just going to keep on going, it's going to get worse. Now what we're seeing at the moment is that there is more information, there's more media hype, there's more money floating around, faster and better technology, and what that means is we've got more people accessing the investment markets with more reasons to make transactions. Quite simply, what that means is we're going to be seeing more and more volatility in the markets as time progresses, simply because it is so easy to do things these days. Now, if we look at history, and especially if you look at the Australian stock market, there's only been one occasion in the past 25 years where we've had 2 negative years in a row. Other than that, typically we get a really good rebound in the markets, especially if we've had a really bad year. A great example of this was in 2009 after the GFC, when we saw one of the best 12 months on the stock market after we just had that absolutely terrible time of watching collapse after collapse around the globe. Now, some of the key ways of dealing with volatility really comes down to what you're doing, but a couple of tips for you that might help you through. First one is to look at the long term. Now, it's boring, but it works. You hear it time and time again in the media, in magazines, in newspapers, and especially from a lot of professionals in the market. Looking at the long term really does help. Now, if you do have the opportunity of jumping out at the peak of the market, there's nothing wrong with that, and some people are lucky to get their timing just right. But if you've ridden the markets down, typically the worse it gets, the better the bounce. Now that's obviously not true if you're in investments which are really bad investments. And these are properties which are in really bad locations where the local economy has completely collapsed and there's no prospect of it coming up in the future. These are companies which have blown all their cash and there really isn't much in the way of a future prospects for them. But when you're in good, solid blue chip investments, and these are properties which are in good, solid areas, these are companies which have got strong assets, good customer base, operating in industries which have got long-term prospects for them, typically, yes, they're going to go down, but the bounce is going to be pretty good for you. And don't forget risk and return. And what I mean by this is typically you're investing into some of these areas because you want a return, but the more return you're chasing, the bigger the risk you're actually going to have. So if you're not prepared to do that in the first place, then maybe you should consider something else. Now, a lot of people talk about diversification, not putting all your eggs in one basket. Now, there are 2 different ways of looking at this, and most people talk about portfolio diversification. This is where we have assets where one might be going up and the other one might be coming down. Now, while that's very, very true and it's a very good thing to practice, there's another element of diversification which is really important for you to consider, and that's practical diversification. And what I mean by that is that you've got your portfolio and then you've got your life, and the 2 of them may not work in conjunction very well with each other. At times, you need to have access to cash. Now, during the GFC, a lot of people were caught a little bit short and they had all their money invested in the markets. Now, if you need cash and your investments have fallen, you've got no option but to sell. So even if you want to be hanging on to those and ride through the bounce, you're really going to find yourself in a sticky situation. So that's where understanding what your long-term needs and having a really good strategy comes into play. If you know you're going to need some money for something in the future, whether that be for retirement, for a house purchase, for some sort of asset purchase, or even just for basic liquidity needs, make sure you've got the money available to you. And this is an area where, for example, having properties and shares and bonds and cash will really be useful for you, because if you do need 20 grand, 50 grand, $500,000, as long as you can identify multiple areas where that money can come from, then chances are, if there is volatility and you are caught a little bit short, then hopefully one of your investments will be well placed so you can cash it out and get your hands on that money. Now, read and listen to balanced opinion. It's impossible to escape the media these days. Everyone's always going to have something to say. So rather than trying to avoid all negativity, listen to it, but also do your research and listen to other people's opinions. Because what you're going to find is for every naysayer there is out there with regards to the market's going to crash, rates are going to fall, rates are going to go up, you're going to find someone who's going to have the opposite opinion. And don't just read the headlines. get into the detail and find out where they're getting their data from. And if you do have the time and the inclination, have a look at some of that data yourself. And what you'll find quite often is that journalists are going to skim over some of the more important aspects in order to actually find something which is quite sensational. In addition to that, talk to people who know, and also talk to people who've got your best interests at heart. Now, I'm not going to be making claims as to who's the right person or not, but some people are going to benefit from transactions. Some people are going to benefit if you stay with the investments long term, even though maybe you should be getting out. So just try to speak to people who both understand what you're trying to do, who understand the markets, but who are also not swayed by what decision you're actually making. Now, hopefully those were really good tips for you, which are going to help you through the ups and downs of the markets. For more information, visit our blog. There's a lot on there for you to read. Have a great day, and I'll see you soon.